Hey, everybody, and welcome to another TrendSpider Chart Request Live, the show where we chart the names that you pick live. So really excited to be here. I'm your host, Jason Kretzky, and we are joined this evening by James from StockChartArt. James, how you doing, my friend?
I'm doing pretty good. It's an honor to be on the show.
Man, it's an honor to have you on the show. How did you trade today? What were you trading today?
Yeah, so I've been taking it a little bit light in this current environment. I did take one trade today, and that was ATI. It's a metal company, alloy. And so we had a nice flat base forming over the last couple of weeks. And then also we had a nice volume shelf forming a round price within that base. And then you can see in the upper right side of the brace, you can see the tightening action. And then also if you look at the volume is very low. So it's always a good thing when you see price tightening on low volume or on declining volume. And then we pushed out of the base this morning. I believe the volume run rate was around 150% when we pushed out. I put around a 2% stop loss on the trade, full size position, and the stock did really well today. I think it closed around 7.2% up for the day. It went almost to 8%, but it pulled back around 0.75% towards the close. So
Nice, beautiful trade. Before we get into the charts here, let's talk a little bit about the indicators that you're using. Obviously, I see some moving averages. Maybe you can talk to us about kind of how you're using everything that you've got up on your chart.
yeah, so I like to keep it pretty simple and clean on my charts. I believe that volume and price are two of the most important things. You really don't need much else. Obviously, the moving averages. I use the 8 exponential moving average, that would be the purple one, the 21 EMA right over here, the 50 SMA, which is the red, and then the 200, which is the light blue. And then I also use the volume by price, which is the volume shelves. It shows you kind of how many shares are being traded at what price. A lot of the times, the volume shelf will act as a launch pad zone when you have a large volume shelf building around price, around the consolidation. And then also, the volume shelves could also act as an area of support if price is falling. So I like to keep it clean and simple. Volume, price. I use the 4 moving averages. I use the volume shelves, and that's pretty much it.
Awesome. All right, well, let's get going here. We always start with an index. So let's go on the SPY and check that one out.
All right. Okay, so yesterday, I'm sure people were a little bit hopeful because we had closed below the 50-day moving average on Tuesday, I believe. But then yesterday we had a nice a strong candle pushing back through the 50, and then today all of our hopes and dreams were thrown out the window. You got a nice big red bearish engulfing candle eating the whole thing up, pushing back through the 50-day SMA. And then also if you look over here, the volume is greater than the prior day. So that makes this a distribution day. So we have 5 distribution days on the S&P so far since the follow-through day and the day 1 rally attempt for this rally attempt over here. So, at the end of the day, you don't want to see so many distribution days adding up early on in a rally. It's better to be more on the cautious end in those scenarios.
So for you, distribution day is defined by above average volume?
So a distribution day is a down day with volume that's greater than the prior day.
Okay, gotcha.
So that's kind of a thing that can slim traders use. We use distribution days and accumulation days just to sort of keep track of what the markets are doing.
Got it. So, the very, very immediate thing that we see here is a potential inverse head and shoulders pattern. That clearly is quite obvious, right? Oftentimes, what is obvious in the markets is not what ends up playing out. What are your thoughts on where this thing might be headed next?
Yeah, so I was talking with somebody about this yesterday. If I kind of just draw the line over here a little bit, you could kind of see the head and shoulders pattern.
Right. On the weekly, it's a big head and shoulders pattern, and then on the daily, it's kind of an inverse head and shoulders pattern.
So we got this, we got the left shoulder over here, we got the head over here, and then we kind of got like two different right shoulders forming over here.
Right.
But that's why this market has been so difficult, because
Right.
we initially broke below the neckline of that head and shoulder pattern, so everybody was extremely bearish at that time. And we actually like entered into bear market territory, I believe, for like 1 day or 2 days.
Right.
And then price kind of found support at that neckline, and then it dipped below that neckline, and then we had that strong 10-day rally over here, where a lot of beaten down growth stocks, a lot of them rallied 30, 40, 50% over the course of 10 sessions. So objectively, also, when you look at the chart, we're not able to stay above the 200-day moving average, which is definitely very concerning. When you start to see price starting to be rejected at moving averages, rather than finding support at the moving averages, that's a big change in character of indexes or of certain particular stocks. So, you never want to see price below all of the moving averages altogether. That's kind of no man's land. You don't know how long price is going to stay below the moving averages, once it falls below it. So for me personally, I'm definitely being very, very cautious at the meantime, especially in tech names.
What is your gut instinct? Is your gut instinct that it does pull down to that neckline and maybe find some support there?
I personally, I think it's going to break down. That's just my personal opinion.
Okay. Yeah.
But the market doesn't really care what I think or what I feel. It's going to do whatever it's going to do, regardless of my feelings.
Right. Okay. Cool.
But,
yeah, I was just kind of curious.
But if I had to put money on it, I mean, I wouldn't be surprised, if we test the neckline and we get a little bit of a bounce, and then we kind of fall back through it. So who knows? We'll see what happens.
All right. All right. Let's get into the voting here. We've got a bunch of votes queued up. And of course, the first name is Twitter.
Okay. So TWTR.
The talk of the town over the past couple days.
Yeah, I know everybody's really excited about this one. Since Elon Musk has been speaking about buying the company at flat right, even though the offer was rejected. So we did have a massive gap up over here. Let me just highlight this a little bit more so that everybody could see it. So when the news was announced that Elon Musk was, over the last couple of months, purchasing a 10% stake in the company, we pushed out of this consolidation pattern over here, and we gapped up on the highest volume ever since the IPO date. So that's always something that you should take note of, if you have the highest volume for that stock in its entirety. But it looks like we're starting to backfill the gap. We closed today back below the 8 EMA. If I click the after hours, I know that price moved a little bit after hours, back above the 8. Definitely some heavy volume came in today, some heavy selling on the stock, which is not what you really want to see at the end of the day if you're looking to go long into the stock. I actually tried to play the stock a little bit on this gap up, but I did get stopped out 2 different times for, I took around 2% losses on each position. But, when there's a lot of emotion involved, it's better just to step away and let price tell you what it's going to do. If we could bounce off of this 8 EMA and kind of start to trend back up, I would definitely consider getting long again, but I would definitely look for the possibility of this gap being filled right now.
Where are you measuring your volume by price from? Just out of curiosity. Do you have it at a set place for all of your charts, or do you kind of move it around depending on what you're looking at?
I move it around for each particular chart. It was just kind of anchored at this particular spot automatically, but if I kind of move it in a little bit to a closer date, we also have this large volume shelf over here, which is acting as supportive price as well. So if price is really able to clearly break through this volume shelf and continue to drop below the 8 EMA, I would definitely expect a backfill at this price. But on the other end, if we're able to move back up off the 8 EMA at this level, and then especially if we're able to close back above this HVE candle right over here, this candle right over here is the highest volume ever to date. Whenever you're able to take out that candle on the highest volume, it's a spot that you could potentially go long. Obviously you need to use a stop loss, but again, when there's a lot of emotions involved with a stock and you don't have a clear trend yet, and then especially tech in general just got absolutely slaughtered again today, it's better to just let price resolve on its own. Let there be a clear change in trend, and then take action on the stock. While there's so much news driven price fluctuation on a daily basis, especially the way it is in Twitter, you just want to be very careful. Make sure you're using tight stop losses for the trade, because price could move very quickly in either direction. If you're shorting the stock or you're going long the stock when there's a lot of emotion involved, things could fly really quickly either way. So just make sure that you're exercising proper risk management.
Yeah. Speaking of proper risk management, how do you define your stop losses? Do you have like an R value that you're looking for, or what? How exactly do you do it?
Yeah, so it's really individualized to each particular setup that I'm taking at the moment. ATI, for example, ATI was a trade that I took today. I took the trade when the stock was maybe 2% out of its base. And then I played the former resistance level around 28.37 as my stop loss.
Got it.
So obviously, like when stocks break out of the consolidation and they break through a pivot zone and through a resistance zone, that area that it broke through should then begin to act as support. So, right. It depends on every single trade. A lot of the times I'll use moving averages also, the 8 EMA or the 21 EMA, but okay. It's individualized to the setup that I'm trading off of. And I don't like to take more than 3%, 4% risk per trade max.
Okay.
I like to really keep tight risk on my trades.
Got it. All right. Well, let's keep on moving on. We've got our next round here all queued up, and it is Mara, M-A-R-A, is a Bitcoin miner name.
M-A-R-A. I believe they're based in Canada.
Oh, I don't know. Ooh, interesting.
So yeah, so Mara, clean this up a little bit so everybody could see good on the other end. So yeah, Mara, we've had price in this range since around the end of December. You know, price has been in this consolidation zone. So right. And then you also got a nice, you know, large volume shelf, you know, around price in the base. But at the same time, right now, price is below all the moving averages. The moving averages are turned down, and in a downtrend, that's never what you really want to see in a stock that you want to go long in. If I was going to play this stock, I would either wait for a break of the downside to go short, or a break of the upside to go long. But for the meantime, we're kind of in no man's land, and we're within this consolidation. And also at the end of the day, you know, I really want to be trading stocks that are in strong uptrends, that are either at or near all-time highs, that are above all of the key moving averages, the 8 EMA, the 21 EMA, the 50 and the 200. And you'll find when you focus on these kind of stocks and when you focus on these setups, you're putting in the odds in your favor and you're stacking the cards in your favor a little bit more. So at the end of the day, we want to have the cards stacked in our favor as much as possible. You know, so many people have been focusing on these, you know, beaten down tech stocks for the last 2 or 3 months. And they're just absolutely getting chopped to pieces. You know, even though there's a lot of strength in certain areas, in fertilizers, in metals, in oil and gas, in coal. So, you know, I definitely wouldn't be looking to make any moves right now. I would wait for it to either break out or break down from the space to make a play.
Right on. Yeah, and that's some good advice too. You know, if there's not a good setup, why play it? There's a plenty of fish in the sea. So many other places where you can find opportunities. So everybody who's watching, like, that's a really good piece of advice to kind of keep at the back of your mind before you go trading anything. All right, let's keep on moving. We got PLTR next.
All right, the great almighty PLTR. I know Dan, the CEO over at TrendSpider, is
he's a fan.
He's a big fan of this one.
He's a fan.
All right, so, you know, like kind of like a similar situation to Mara. You know, if we take the stock from over here to over here, the stock is around 57% down from its highs. You know, the price has been consolidating and forming a basing pattern over here. We're now below all the key moving averages. You know, we're far below the 200. We closed back below the 50 SMA today. The 8 EMA is turned down. The 21 EMA is starting to turn down. And, you know, we do have a large volume shelf around price, you know, which could definitely act as a launch pad. more of the time when the stock is already in a strong uptrend. So I would be looking for price to break out of this consolidation pattern on above average volume. Until then, I really wouldn't do anything. I would just remain patient. You know, at the end of the day, you know, you never want to force a trade. You just want to let the trades come to you, mark your charts, add it on a focus list, and, you know, you just got to wait patiently until your setups are triggered.
Right. What would get you short? Got it.
So below here, and then also over here, so we have a little bit of a flag forming right over here. So you could definitely look to possibly go short over here, especially, you know, we got all the kind of moving averages intersecting over here. So if price does break down from here, you know, it's breaking through a support level, and then it's clearly being rejected at the moving averages. So it could definitely be a good opportunity to go short right over here if we break down from this level. Obviously, I would probably use a stop loss at the 50-day SMA if I was going to go short over here. But then, you know, sort of like the secondary level, if I was going to go short, would be if we break down below this long and over here.
Got it. And we just had a question come in from the audience. You have 2 EMAs that live on your chart all the time, and you have 2 SMAs that live on your chart all the time.
Yes.
Do you have a particular reason why you choose EMAs on the shorter moving averages and SMAs on the longer, or what's the story there?
Yeah, I just, you know, a lot of the stocks that I trade and a lot of growth stocks that I trade, the way price interacts with those particular moving averages is why I choose them. You know, if you study charts historically, a lot of growth stocks will really respect the 8 EMA, the 21 EMA, and the 50 SMA while they're in a strong downtrend. I mean, in a strong uptrend. Let me kind of like an example. Yeah, so if you look at like Tesla's run and from 2020 to 2021, you know, for much of the stock's move, you know, it basically would respect the 8 EMA for a large duration of the run. You know, like we would eventually like pull back, like you'd have little pullbacks, like you'd find support at the 21 EMA. And then for the larger consolidations, you know, a lot of the times you would find support at the 50-day. So those moving averages is just what works for me. You know, some people like to use the 20 SMA, some people like to use the 65 EMA. It's really a preference at the end of the day of what works for you, what kind of stocks you trade, and what you're comfortable with. And these are just the moving averages that I like to use for the stocks that I trade.
Got it. All right, cool. Yeah, just curious. All right, let's keep on moving here. Next round, VALE. I believe this one came up last week too.
Yeah, Vale, I believe that's a lithium mining company. I think it might be better to pull up the weekly for this one. I think we got a big cup base forming, if I'm correct. Yeah, we do. Let me just so when I use the weekly chart, I like to use the 10 SMA and the 40 SMA.
Okay. Any particular reason?
Yeah, so if you use like MarketSmith, for example, and William O'Neill, that's what he would always use for the weekly chart. He would use the 10 SMA and the 40 SMA.
Okay.
If you look in like really strong uptrends, the stocks will continually find support at the 10 SMA and the 40 SMA. I could actually like show you some examples later of how that works exactly, but let me just show you. So yeah, so we got a pretty nice, cup base forming on Vale. Just make it smooth.
This is why they call you StockChartArt.
Yeah, so we do, we got a nice cup base. You got a pretty nice size volume shelf, building a round price within the base. And then we definitely, you could consider this a handle forming over here. So yeah, I definitely like this chart. I would definitely wait for a breakout out of this handle on the cup. I would definitely look for above average volume on that breakout. Hold on one second. Let me just, where did my volume go? Here it is.
Is there a particular amount above average that you like to look for?
Yeah, I'd like to see a volume run rate at that specific time, at least above 100%. A lot of the times when volume is coming in, it especially comes in like early in the morning, like straight once the bell opens. A lot of the times you'll see higher 300, 400, 500, even 1,000% volume run rate. So, the more the better at the time of the particular breakout. But, overall, on a breakout, you want to see at least, 50%, 50% more volume compared to like the 50-day like simple moving average, like the volume run rate. You want to see at least 50%.
Okay. Got it. Cool. So we're buyers on the breakout. What gets us bearish?
It would definitely get me bearish if we close below this 10-week line on the weekly. Since we've gone into this sort of strong uptrend since around 1285, we've found steady support at the 10 SMA on the whole ride up. So a close below it would definitely be a change in character. If we go a couple of weeks back over here, we did dip below the 10 line very momentarily, but we formed a nice hammer off of it, and we did close above it. And then you also have the 10-week crossing into the 40-week right here, which is definitely bullish as well. And then I kind of like the way that, if you look over here, you can see that the volume is overall declining while it dries up within the handle of the cup. You always want to see that when you're trading a cup and handle pattern. You always want to see volume dry up, towards the low of the handle, and then you really want to see volume begin to expand as it comes up the right side of that handle. So that's just something to keep in mind. It's just like being like a little bit more technical, but it's something that you should be aware of and look out for. I just want to see if I see anything else. If I look at the daily chart. but yeah, it's definitely an interesting setup, and that's more of a setup that I would play off the weekly as opposed to the daily chart.
Got it. Awesome. All right, let's keep on moving. We got SoFi up next.
Oh, good old SoFi.
Ooh, that's not pretty.
No, it isn't. Let me see if.
Holy moly.
So yeah. SoFi from here to here.
70.5%. Oh
Yeah,
my God.
let me just switch
Wow.
my moving averages on for the daily chart. Yeah, so we are down 70% from all-time highs in about 5 months.
Insane.
So we're basically still in a stage 4 decline at this point. We haven't even begun to see price really go sideways and start to begin a stage 1. Price is below all of the moving averages. All the moving averages are sloping downwards. We haven't even began to consolidate at all and begin a stage 2. You never want to trade stocks that are in a stage 4 decline. I can't emphasize that enough. You never want to catch a falling knife. There is absolutely no point to it. You're gonna chop yourself up, and you might get lucky once or twice, but if you continually try to play those stocks that are in stage 4 downtrends that are 50%, 60%, 70% off of their all-time highs, that are below all of the key moving averages, all of the odds are stacked against you at that point, and you're swimming against the current, and there's just no reason to do that, because there's always stocks that are in clear uptrends, that are at or near all-time highs, that are in strong industry groups. So this isn't something that I would even remotely look at right now. If you're thinking about trading the stock right now, please just stay away from it unless you're shorting it into the moving averages.
Right. Yeah. Yeah. It's I mean, making new lows all the time. And clearly when it makes a new low, it eventually will bounce. So there will be a bounce that will happen. It's just a matter of how do you even gauge when it's going to bounce. You just don't really know. So, all right. So that's a good enough answer for me. Just don't even play it. Just stay off SoFi's field until conditions improve for the better. I like it. All right, let's keep on moving. Next round, Target, TGT.
Target.
Target.
All right. Good old Target. My wife loves to shop at Target.
I mean, everybody loves to shop at Target. That's the whole thing. That somehow when you go to Target, you go in with the intention of spending $5 for one item, and then you leave having spent $75 and you have 10 items. Like they are the I don't know how they do that, but they do that to me pretty much every single time I go there.
Yeah, it's because they have everything.
That's true.
Yeah, so.
Oh, that's a nice look.
Yeah, see, this is a more appropriate setup of something that I would possibly consider trading. Let me darken this up a little bit.
Nice little close over the, what was it?
So
200?
so you almost got kind of like a inverse head and shoulder pattern forming a little bit. You also got a really nice large volume shelf building around price. I kind of like this action over here. We had like 4 tight closes right in the upper right side of this consolidation where this resistant line is. and we're just pushing through the 200-day moving average today on slightly above average volume. So if I was personally going to play the stock, I would, if I was going to go long on it, I would place my stop loss at the 200-day moving average. I'm sure some people might have gone long today. I was actually looking at this chart yesterday. One of my subscribers had asked me about it. And you kind of have this little tight consolidation over here. I'm sure some people traded it on the breakout from here and then on the push through the 200-day moving average. So if I was going to go long over here, I would definitely place my stop loss at the 200-day. I want to see price get back above there and stay above there.
So on a breakout scenario, you're just buying as soon as the breakout occurs. You're not letting it come back to a point.
No.
Okay.
I want to buy as soon as price is moving through the breakout pivot.
Got it.
No more than 3% once it moves through that area. I want to buy as close to it as I possibly can.
Okay.
And I'm always looking for the volume to back up that breakout.
Right. Yeah, and you have it today, right? I mean, you have, well, it looks like you have it. You have above average volume today, and then you have those two big volume days, what, 4 or 5 days ago. I wonder, I don't track this name. I wonder if they had earnings maybe like at the top of the week or at the end of last week. Maybe that would have caused those big volume days. They had to have announced something, right?
Earnings.
Huh? No, not earnings. Interesting. I wonder what it was. Well, regardless. All right. So we're bullish above the 200.
Yeah, it had to have been something.
What gets you bearish here?
So I would definitely be bearish if we kind of, like gap down tomorrow, like straight through the 200-day, or if we come back through the 200-day and start to fall. You're seeing that in a lot of stocks right now. They're just not able to stay above their 200-day moving averages. Like if you look at like Amazon, for example, we had this nice big rally up, and it just couldn't stay above the 200-day moving average. As soon as it came into the 200-day, just flat out rejected in a decline, and now it's below all of the moving averages. Google also, we had a nice big rally. We got above the 200-day, and then we just weren't able to stay above there. And now we just came right back below. A lot of these stocks are just not able to get above the 200-day and stay above the 200-day, and that's definitely concerning. Because when these stocks that, even though we're not officially in a bear market right now, many stocks have been in a bear market for the last year,
Right.
even longer. So.
Right. All right. Well, let's keep on moving on here. If you're a bull on target, you want to see that 200-day moving average hold. Hopefully it will if you are long that name. Next round, we're going to go with CTRM, Castor Maritime.
What's the shipping name?
I think so. Yeah, I've traded this name back in the day.
Oh, that's interesting.
Pretty strong looking. Quite a bit of volume. Yeah, kind of similar look to that name that you were trading today. Above all the moving averages. All of them pointed up, except for the 200, really. At what point does a move start looking too extended to you? Just out of curiosity.
I mean, I don't use like a specific percentage amount. I know a lot of the time people use what is it called? The areas that they put on there to look for extensions. Some traders use.
Oh, the fibs?
Yeah, the fibs. I don't use fibs. Just, like a lot of things are by eye and by feel from just trading every single day on a daily basis. But, once you start to see a stock more than say, the stock is like 15 is around like 17% above the 8 EMA right now. It's around let me look over here, the 21 EMA. It's around 26% above the 21 EMA.
Right.
So it's definitely extended at this point.
Right.
You don't want to chase up here. If you were able to get in on this breakout, you're in a great position right now. I would definitely trim some off, just a short profit. We did have nice volume on this breakout, and then on the follow through days of the breakout, we had some nice volume too. We're back above all the key moving averages, especially back above the 200-day. The moving averages are starting to turn up. So I would definitely wait for like an EMA crossback, which is a pullback to the 8 EMA, and then like a bounce off of it, or I would wait for a shorter tight consolidation, and then to get in on that breakout. Like a lot of the times, like on a strong breakout, like you might just get like a few days, like kind of like the stock, like like might go like this or something.
Yeah, just kind of flag out.
And then once like price like breaks back through that consolidation, it will give you a secondary opportunity to get into it. It will also give an opportunity for the moving averages to catch up to price, because you never want to buy a stock that's extended.
Right.
But yeah, this one's definitely looking pretty good. I think I'm gonna actually add it to my watch list.
A lot of traders do use those fibs for targets. So when you're getting into a trade, how are you thinking about your targets? If you're not using fibs, what are you using?
So a lot of the time it's based on the current market environment. I'm looking at like what's working at that particular time. How much is the average stock running in this environment before it possibly makes a U-turn and gives back all of the gains? In this current environment, I'm not going for big wins. I'm not going for 30%, 40%, 50% gains on my trade. I'm looking for small 10%, 15%, 20% trades. If I took this trade, say on this breakout, we're around 20% up right now. I would have sold at least half of my position, maybe 2/3.
Got it.
So when you're in a difficult market environment, especially like the one that we're in right now, you want to take the profits while they're there and while they're available. And the more extended that you are from the 8 EMA and from the 21 EMA, the more you should be looking to lock in profits at that level, because the probability that the stock is going to pull in increases.
Are you just kind of some really basic questions about your style of trading? Are you scaling out as you go? And also, are you playing like shares, or are you an options trader, or both?
No, I strictly trade common stock.
Okay.
No options. 99% of my trades are on the long side.
Okay.
If a short setup just happens to like really stand out to me and I see something, I'll take it. But it's not what I'm looking for at the end of the day. I like to just stick to my style, and I like to really master my art and my work.
Got it.
I'd rather be excellent at one particular thing than average at 5 different.
I think it's incredibly sound advice. Find something that works and try and do that as often as possible. All right, we're gonna jump to the next round here.
Just like real quickly, like like Zim was like one of
It was hot.
Was a trade that I took. I made around like 20% profit on the trade. So I basically sold the rest of my position like at the exact top, like right over here. But I scale out quickly. Probably on the second bar, I would sell 25%, and then on this bar, 25%, and then on this day, where we're definitely looking extended, I probably sold, 10%, 10%, 10%, and then, finally like the last 20% on this candle right over here. But if you're not careful in this environment, you're going to give back all your gains, because look how quickly, price pulled back to the breakout level, within, 1, 2, 3, 5 sessions, you're right back at where you bought the stock. And if you didn't take profit quickly, you're giving it all back and you're not making any money on the trade.
Right. Right on. All right. Well, let's keep on moving. I already I skipped us to the next name, which is Energy Fuels.
Uranium, right? So uranium stock?
I believe so, yeah. Ooh, this is getting into your territory here.
Ooh, I have a line here already. Yes.
So you bought the breakout yesterday?
No, I did not buy this stock, but it's definitely looking good. We got let me just do this for you so you guys can see it good.
Yeah, big cup and handle, huh? And again, above all the major moving averages, everything's pointed up. This is exactly what you're looking for.
Yeah, exactly.
I spoke with a friend of mine recently on one of our Twitter spaces, Sean from All Star Charts, and he was talking about how much he loves to buy names that are breaking out into all-time highs, because when a stock is at an all-time high, every single person that owns it is in profit. And generally, if everybody's in profit, nobody really wants to sell, right? So all-time highs tend to lead to more all-time highs. I don't know if it's at all-time highs right now. I could be wrong about that, but it definitely looks that it's getting pretty close, at least to maybe the past year highs, or so past couple year highs at the very, very least.
Yeah, but yeah, you got a beautiful cup with handle pattern.
Right.
And then you could kind of see over here, as you get to the low of the handle, like the volume starts to really dry up. And then if you look over here, as it like finishes coming up the right side, you can see that the volume is expanding 1, 2, 3. So the buyers are really stepping up, and purchasing the stock, heavily, not just small amounts, not Aunt Sally buying the stock. Those are institutions, and
I'll have one share, honey.
So, like one of the things like you always want to look out for too, you want to look for accumulation patterns on the right side of a base. And if you look over here, if you look on the right side of this base, you can see beautiful accumulation patterns. Look at all those skyscraper green volume bars. They're just like, let me extend, right.
Yeah, it's certainly very clear there, isn't it? It's a ton of volume coming in to that right side.
So just look at this clear accumulation on the right side of the base. Most of the down volume is on below average. Meanwhile, the up days are on above average volume, and then a lot of those days are just absolutely monster skyscraper volume. So that's showing that the stock is clearly under accumulation, and that's what you want to see in a larger consolidation pattern, in a base pattern. You want to see accumulation along the right side of the base, and a handle, you want to see volume dry up as it comes to the low of that handle. And then you want to see volume start to pick back up as it pushes up the right side, just the way it does right here. The volume picks up and it expands as it goes up the right side. We broke out yesterday right over here. The volume was above average. It didn't really like take off today or anything, but it did find support right at the breakout pivot of that base. So the prior resistance is now acting as support. I'm actually going to add this stock to my watch list because it looks pretty good. I like it. So if I was going to go long over here, I would place my stop loss over here at around 1055, which is the prior resistance, which should now be an area of support.
Right. And then the same deal for your targets to the upside. You're kind of just scaling out slowly as it gains and as it kind of moves farther and farther away from your short-term moving averages.
Yeah, you always want to sell into strength while the stock is strong.
Yeah. Right.
And then a lot of the things that I like to do also in this environment is I like to kind of like, especially for lower risk trades, I like to size up more on the position because I'm taking less risk. So I like to really trim a lot earlier than I usually would. So, what that does is it just allows you to take profit off the table. Like even if the stock's just up like 3 or 4%, let's say you size up like double than you usually do, but you sell 25%, 30% of that position while the stock is up 3%, 4%, 5%, and you scale out a little earlier than you usually do. You're just able to lock in profit and assure that you're profitable on the trade no matter what. Even if the stock pulls back to your buy point and you place a stop loss at break even, you're going to be profitable on the trade. So
right,
you just got to find things that work for you and little tweaks here and there that are going to increase your P&L over time.
Yeah, I hear Brian Shannon talk about this quite a bit too. When he's really got some conviction on a trade, he'll go in really, really heavy initially. And like, as soon as it moves in his direction, he'll make a little bit and then he'll cut down to a size that's a little bit more manageable, that he feels a little bit more comfortable with. And then he'll let it kind of work for a longer term. So that's interesting that you bring that up too. All right, let's keep on moving here. We've got SLV silver.
A good find. I like this one. All right, SLV.
It's just a tough one to trade, man. It's just like when it gets moving, but shoot, when it ain't moving, it can be a dog. It can be so slow. Has been my experience with it anyway. There's a huge base.
Goddamn. Yeah, literally since July of 2020, it's basically been trading in this
sideways. Yeah, it hasn't gone anywhere. You got to have patience. If you're trading silver, you need to have patience.
Yeah, I mean, like as of now, we're above all of the moving averages. We just got it. The 8 EMA just crossed into the 21 EMA, which is good. You want to see the moving averages trending on top of each other, the 8 on top of the 21 on top of the 50, and then the 50 on top of the 200. And you want to see the moving averages, sloping up in an uptrend as well. I mean, if I was going to look to trade this stock, I mean, I guess I would be kind of like looking for a breakout over here. We got kind of like a tight little semi W bottom forming. So draw it out for you a little bit so people could see it.
Yeah, a little small little guy.
Smooth though.
But kind of same deal here, kind of looking for the breakout.
So yeah, I would really just like look for the breakout over here. I guess you could even like move this. Yeah, but like pretty much this level. You know, this isn't like a setup that I would be like super excited. That would be on the top of my list. But there's nothing wrong with the setup either. You know, we also got like a monster volume shelf forming a round price. A lot of the time, a volume shelf will act as a launch pad. When you have a large volume shelf forming a round price, like within a consolidation or within a basing pattern. So, you know, there's definitely nothing wrong with the setup. You know, we're above all the moving averages. You know, we just had that 8 into 21 EMA cross, large volume shelf. We're kind of in the upper right side of this pattern. So I would just kind of, you know, look for price to push out of here, and I would place a stop loss at the resistant level, which should
at the breakout level. And again, looking for big volume.
Yeah, I would be looking for, you know, above average volume. You know, we've had some, you know, decent buying volume over the last couple of sessions. So yeah, it's a you know, pretty decent looking setup.
But be prepared to sit around and wait. So if you're trading this thing with options, buy leaps, maybe. Right?
Yeah, my advice, you know, just, you know, focus on stocks and strong uptrends that are at or near their all-time highs, that are in the top 20 industries. You know, right now a lot of those stocks are fertilizers and metals, coal stocks, oil and gas. You know, for me, I use a can slim methodology of trading, which is based off of the teachings of William O'Neill, and you're basically, you know, selecting the top rated stocks, the strongest stocks from the strongest industries that are moving out of basing patterns or consolidations on high volume. You know, it's not that complicated, but, you know, there's a lot of complexities to trading that, you know, that you just can't learn from in a book, and that you have to spend time in front of the computer to really, you know, master and build a system that works for you.
And there's also the piece of just sticking to it, right? Committing to a style, committing to a process, and drawing a line and saying, I'm not going to do XYZ anymore. I'm not going to buy those names that are down 70%, or I'm not going to buy a name if it's trading below XYZ moving averages, right? Like half of the struggle, and I mean, I don't know if you've dealt with this, probably you have. I've dealt with it a lot, is just sticking to a process, just picking a process and saying, I'm only going to trade if XYZ are true. And that's it, period. So, you know, having something that you stick to, I think, is just really, really important. And the fact that you have that is great. We are bumping up into an hour here, James. How are you feeling? Yep, we're at an hour already. How are you feeling? You want to do maybe a handful more names? You want to take it a little bit longer?
Yeah, I'm good, man. Rock out.
All right, let's do it. Let's keep on moving here. We got BYND. Haven't looked at this one in a while, but I did have a Beyond Meat cheeseburger last night, and it was delicious.
I remember this was like a big thing in like 2020.
Oh man, they're so good. Like, I don't know if you're if that's your thing. I know some people are kind of grossed out by them, but I think they're really good. Oh, I don't like the chart though.
I mean, I got nothing against it. I love cheeseburgers. Like, I'm just such a cheeseburger guy. Like, give me a real good cheeseburger, some onion rings, a nice bottle of root beer, and
forget about it.
I'm a happy camper, bro.
What's the best cheeseburger in New York?
Oh man, like, so there's this diner called Jackson Hole. There was one in my town, but it recently closed down. But there's one over in Astoria now. The Jackson Hole's still over there, and they have these huge, massive burgers. But I really like Shake Shack, man.
Oh,
Shake Shack and Bear Burger have some pretty good damn burgers.
all right. Cool. Good to know. Next time I'm in.
And you can never go wrong with the Baconator from Wendy's if you're on a budget.
That's funny. All right. So how's this looking? Pretty terrible.
I mean, if you flip the chart the other way,
Okay.
it looks really good.
Right.
But it looks to me like you got like a little like bear flag forming over here. Like see it, when stocks are in downtrends, the moving averages act as resistance. So if you look at this whole move downwards from here all the way to here, which is the stock is down 74% in the last 9 months. Just look as price drops. It's just continually, it can't get through the 8 EMA. It might slightly push past the 21 EMA for a couple of sessions, but it's rejected again. Again over here, it's moving into the 50, and it just can't even get close to pushing through the 50, and now we're back below the 8, and I would just expect price to kind of just break back through here through this bear flag, or who knows, it might break out and then rally to the 50-day and then get rejected over there. But the stock's still in a stage 4 downtrend, not even in a stage 1 yet. So you don't want to trade stocks in stage 4 declines. Just stay away from them. Stay away from stocks that are 50%, 60%, 70% off of their highs, that are below all the moving averages. Just don't do it. Just stay away from them.
Just don't do it. That's all you got to say.
So many traders make that mistake that they're looking at the stocks that were big winners of 2021. Stocks like Upstart, for example. Upstart was the FinTwit darling of 2021. Everybody traded Upstart. It had a huge, massive run. It was one of my biggest winners of 2021. But just because a stock was a market leader of one market cycle doesn't mean it's going to be a leader of the next cycle.
Right.
And
right.
You're just setting yourself up for failure when you're going into these stocks that are down such a far percentage off of their all-time highs. Because what is really, what are the odds that the stock that you're holding or you're investing in is going to be the next Apple or the next Microsoft or the next Google?
Right. They're quite low.
Because I want to give you like a quick little statistic over here, just so you understand like how serious it is. So the average run of a true market leader is 12 to 18 months, okay? And then after that market leader tops, nearly half of the true market leaders will never recover to their former peaks. So half of the true market leaders, they're never going to see their highs ever again. And those that do could take almost 5 years or so to do so. And some of the biggest winners can even take much longer than that. So, the statistics and the odds don't lie at the end of the day.
Yeah.
So,
and they are stacked against you.
Yeah. You want to have, you want to have the probability and odds stacked in your favor as much as possible.
Right.
Why not trade stocks that are in strong uptrends,
right,
rather than stocks that are in strong downtrends? I mean, if you're shorting a stock, if that's your style and that's where you prosper, but I'm a swing trader, position trader. and I go long. I'm looking to capture the larger chunk of a stock's move, of a trend. I'm not trying to catch the exact bottom or the exact top. I just want a nice bite out of the middle.
Right. All right, James, we are getting the, I'm getting poked here to wrap this thing up. So let's do one more and then we'll call it.
Okay.
And the last round we're going to do here is Costco, probably one that's on your radar, I would imagine, based off of how it's been performing lately.
What was that? CSCO?
It's COST.
Cost. Oh yeah, cost. Bum, 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 bum.
There you go. Clean and beautiful. And the opposite of BYND. So this is interesting. This is interesting because we break all-time highs and then we rally back to them. So now we've tested them too. This is what I would be more interested in, that pullback.
Yeah, so we had the nice, pretty much a cup base. We broke out on really nice high volume over here. I mean, we had the, this is what I call like a breakout retest bounce. Price breaks out, retest the support line, and then bounces off of it and then pushes back up. And we're just kind of, sitting right on top of the 8 EMA over here. I mean, listen, there's nothing wrong if you're, even if you just got into the position on the breakout, you have maybe like a 3% gain on it. The breakout looks solid so far. I really like to buy, right as the stock is pushing out of the base. I mean, we're not even really 3% above the pivot. So I guess you could still buy here if you want to. The setup is still actionable. I would definitely place a stop loss at the 21-day EMA if I was going to go long right over here. If I didn't catch it right on the breakout, and it was something that I just really wanted to get into, I would put my stop loss at the 21-day EMA.
Would you prefer to go long if it breaks a new high? Would you rather go long there than where it is right now?
Yeah, you could also go long at this point, but I mean, if this was like something on your radar and you're like, oh, I missed the breakout, I really want to get into it, and tomorrow morning, price just starts to move right back off of the 8 EMA tomorrow. You could definitely get back into it. The setup is still actionable because we're only around 3% above the pivot point from the breakout, and we're kind of trending above the 8 EMA. When stocks are in a strong uptrend, they're gonna ride the 8 EMA. So if this breakout has weight to it and it sticks, it's definitely going to ride the 8 EMA a little bit. So I would personally, place the stop loss at the 21 EMA. I wouldn't even wait for it to break out over here to a new all-time high. If it was something I wanted to get into, I would just make sure that we're kind of moving off the 8 EMA tomorrow, and that we're not just kind of dropping below it.
Got it.
But the stock overall, looks good.
Right on, James. Well, my friend, this has been awesome. Thank you so much for sharing your time and your slim wisdom with us. We do appreciate it very much. Let the audience know where they can find you.
Yeah, you could always go to my Twitter page at Casualty War, StockChartArt. You can also go to my website, www.stockchartart.net. If you have any questions, you're struggling in the market, you could always feel free to shoot me a message. I leave my DMs open. And I just want to thank you guys for having me on your show. It was truly a pleasure. Jason, thank you so much. Sadie, thank you for setting everything up. And I hope to be back on soon.
Absolutely, man. We hope to have you back on soon. We thank you for being here, and we thank everybody who has tuned in this evening for doing just that, for tuning in. Obviously, the markets are closed tomorrow, so it's a long weekend for us traders. Hopefully, everybody had a profitable trading week. Hope you guys all have an awesome long weekend, and we'll be right back at you next week, Tuesday night at 8 p.m. Eastern. We're doing another one of these live chart requests. This time, or rather next time, it'll be with the creators of the Go No Go indicator. If you've been following along, we just added the Go No Go indicator onto the TrendSpider platform this week. It's an awesome indicator, super cool, helps us determine trend in a whole new kind of way. So if you're a TrendSpider user and you haven't given that indicator a go, take some time, check it out. We've got a video on YouTube that explains how it works. Play around with it this weekend. Think you'll like what you see. So yeah, until then, I hope you guys all have an awesome weekend. James, have a great weekend, man. And we will see you guys all next time. Have a good one.
All right. Cheers, guys. Have a good night. Enjoy your 3-day weekend.
All right, brother.